Alrighty, the meeting is now recording, so I'd like to welcome everyone to the quarterly OPEB Trust Fund Investment Committee meeting. I am Heather Claybaugh, the Associate Superintendent of Fiscal Services. This morning, I'd like to welcome our board member, Jamie Brennan. In December, they do new board assignments, and Ms. Brennan was selected to join the OPEB committee. We thank Mr. Rose for his service, and we welcome Ms. Brennan. Thank you so much. Our first order of business is approval of the minutes from the November 15th meeting.
I move to approve the minutes from our November 15th meeting.
Is there a second? We have a second?
I can second.
Okay. Thank you, Derek and Renee. All those in favor?
Aye.
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 Thank you. So we'll begin with our presentation from our advisor, Tanya Keating, with the analysis of the investment performance through December 31st.
Thank you, Heather. Good morning, everybody. Would you prefer that I shared my screen? Okay. Let me pull that up. Can you see that now? Great. Okay. So overall, the quarter was kind of a mixed bag, I would say. U.S. equities were positive for the quarter. You can see up 2.5. Both developed international and emerging markets international both down about 8%. But for the calendar year as a whole, very strong, really, especially for U.S. equity, up 25%. Results kind of around the time of the election were favorable. Up 25 for the year. Longer term, really strong returns for U.S. equity across the board. International and developed have also been positive for the year, but a bit more muted. Within the U.S. equity space, we continue to see some dispersion between the different areas, such as growth stocks, which have continued to outperform value. Larger cap names, which is the Russell 1000, continuing to outperform small cap, which is the Russell 2000. But overall, we have exposure to a U.S. all cap equity index fund. And so we've really kind of eliminated those differences in the market as we have exposure to all areas within the U.S. equity market through our index fund with Fidelity. So overall up about 24% for the year. And you'll see that when we look at the performance of the individual managers on the fund. Within fixed income, this is the yield. I'm trying to make this bigger so you can see this a little better. The yield curve as of the end of December is this green line. So you see starting here at 1 month treasuries all the way out to 30-year treasuries. And this is the brown line is where we were as of September. So you can see on the shorter end of the curve here, yields came down during the quarter. The Federal Reserve did cut rates, short-term rates twice during the quarter. So current short-term rates at 4.25% to 4.5%. The Fed did say at the end of the year that they expect, they do expect to make additional cuts in 2025, but that they would be less frequent than I think the markets, initially anticipated. So there was a little bit of a pullback in the markets in the month of December because of that. The Fed has met once this year and has not made any changes. So overall cash, yields have come down a little bit, but then you see once we get to this 1 year point, of everything from September through December actually went up. So, bond yields did increase over the quarter. And with that, we saw negative returns in the bond market. So not a great quarter for bonds, down about 3% for the quarter. 1.25% positive for the year. So I think there was a little bit more volatility in the bond market last year than we anticipated. We do still think fixed income is an attractive place to be, and that rates will continue to prove attractive. And we've had a lot of clients actually move some money from equity to fixed income because of that. So this is kind of our summary observations, and these are the key points that I will highlight as we go through the performance report itself. So as of the end of December, we are within our asset allocation policy. You can see about 3% overweight domestic equity and about 1% underweight international, 2% underweight fixed income. Those are really byproduct of the market returns. We do have these slight deviations, but they are all within the allowable policy ranges. On a kind of market value basis, you can see for the calendar year, we've had growth of over $23 million. So started the calendar year at 177 million, ended at just over $200 million for a rate of return for the calendar year of 13.6%. The first half of the fiscal year, the plan is up 5%. And longer term, you can see the growth there. Longer term, there's some positive cash flow of $2 million and investment earnings of over $20 million for a rate of return over the three-year period of about 4% per year. So for the quarter itself, down 0.8%, slightly ahead of our policy benchmark, which was down 1%. This is a weighted average of all of the underlying benchmarks that we use for the three different asset classes. So basically the policy benchmark is 47% in the domestic equity benchmark, 13% in the international equity benchmark, and then 40% in the bond benchmark. So for the calendar year, total fund up 13.6, right in line with that policy benchmark. Fiscal year so far 5%, just trailing the policy benchmark. The outperformance for the quarter specifically can be attributed really to that slight overweight to U.S. equity and a little bit of outperformance for the international equity manager, which is American Funds. So the majority of the exposure within equity, which is the U.S. equity portion, is indexed with Fidelity, up 24% for the year, and that's that total stock market index, so all areas of the U.S. market. We have active management in the international space with American Funds. We talked about them a little bit earlier last year. They had some underperformance earlier in the year, but they have improved on a relative basis. So for the quarter, international markets were down 7.6%, the fund down 7%, so they've made up a little bit of that differential. In the fixed income space, Dodge & Cox is our core bond manager that we've had since 2019. Quarter was trailed slightly, but longer term performance, they've always added value over the U.S. aggregate index. When we met in November, we had done a manager search to look to move back into the core plus space within fixed income. You'll recall we had Western Asset, who we terminated last year, moved out of that position, had put the money in the bond index fund temporarily. And when we met in November, we looked at different candidates, and you decided to hire, PGIM, which is Prudential. So we started with an allocation of 12.2 million there. That money went in the month of December. So that's why you don't see any performance for that fund yet. We will start their performance history effective January 1. The bond index fund, we invested in the middle of last year, so just about 6 months of history, and that is in line with the benchmark as you would expect. And then just a very small position in cash. So overall performance, I think, for the quarter was good. Calendar year right in line with our policy index. You did make that change to the manager lineup, so we expect, with the addition of some active management there in the fixed income space, potential for, a little bit of an additional, hopefully outperformance as we move forward in 2025. None of your managers are on watch list. That is in the summary as well. And let me just look at the summary and make sure I didn't miss any of the points. I did not. So I will just point out a couple of other pages in the report. This is historical fiscal years. So currently, first half of the fiscal year, we're up 5% so far. Last two fiscal years have been very strong double digits, with the exception of 2022, which include your fiscal year 2022, which included, half of calendar year 22, which we know was a terrible year for both stocks and bonds. All of your fiscal year returns have been positive. with a few of them double-digit positive. So there's been really strong growth in the plan, and I will take you to this page. You can see that just on a calendar year basis. If you look back to the beginning of 2021, so really just 4 full calendar years, the plan has grown with some about 8 million in positive cash flow, and the rest of it in investment earnings. So we're at just over $200 million today. I skipped a couple of pages. Let me go back to one other that I wanted to point out, which is the fee page. Always good just to look at fees. Overall, as I said, a lot of the assets are in index funds with the Fidelity Market Index in the U.S. Equity space, and then the bond index fund as well. So overall fees are very low here at 18 basis points total on assets. Let me pause and ask if there are any questions.
Hey, Tanya, quick one
Okay.
for me. How do the duration compare for our fixed income funds relative to the respective index duration? And I guess what I'm getting at is if we were to see continued steepening of the yield curve, like how does that impact the fixed income performance, do you think?
Yeah, that's a great question. I'm going to check in the report to see if we have the duration stats in here. It doesn't look like we do. And I don't know those for our two managers off the top of my head, but I can definitely look into that and follow up with you. Anyone else? Let me, excuse me, let me just pull up the numbers that I had just ran for the performance since one second.
And Tanya, I'm less focused on what the duration is and just more so what your thoughts are if we were to see a continued steepening of the yield curve, how you think the fixed income investments would perform.
Steepening of the yield curve in an upwards direction, you mean? Yeah. I mean, the managers, the managers will adjust, I think, based on their market outlooks. And again, I apologize. I should have looked at that kind of before we met, what their, current profile is and what their outlook is. So I can definitely, definitely do some more reading on that and get back to you. Just write down your question before I forget it. Okay. So calendar year to date and quarter to date, which is basically the same, U.S. stocks have been up about 4.7%. International stocks are actually up a little more in the tune of 6 to 7.5%. And bonds have been positive, 0.9%. So I would expect, just really roughly off the top of my head, we're probably up somewhere in that 4.5 to 5% so far, year to date. So on 200 million, that's 4 million to 5 million additional of where we are today. If my math is right there, 1% would be 2 million, so 4 to 5 million. So probably somewhere in that $205 million range.
If you could run that, and then I
Yeah,
can share it with the
absolutely.
committee. If you just have an opportunity to email it to me next week,
Absolutely.
I'll share it out with the committee so they'll see where we are today.
Absolutely. And I apologize for that. Lynn is my trusted reminder for
I know,
getting you that information. So.
She's been gone all week, and it's been a little rough around. She does help me with that as well, so I really appreciate it. She did leave me a note to make sure I record the meeting today. Thank goodness. And did you want to give an update on Hamilton Lane?
Yes. Thank you, Heather. So Hamilton Lane, for those of you who've been on the board for a little while, you'll recall that is a private credit manager who we met with towards the end of 2023 to 2024, and you did elect to make an initial investment with them in their Strategic Opportunities Fund 9. So Heather has done a lot of work. When I say a lot of work, I mean, I know it has been a burden on you. So thank you for all of your help in getting the documents together and all of the information that the manager requested. It was a lot, and it's not what you normally do with your the other investments on the fund, which are basically we just tell the bank to purchase a mutual fund and that's it. This was a heavy lift. So we have been approved for their February 2025 closing. So we expect that they will make the first capital call of money from us, before the end of Q1, so likely in March. Again, it's an $8.5 million commitment. Ultimately, the target for private credit will be 7.5%. That was a part of the approved, the asset allocation that was, approved and ultimately adopted by the board. We did, when we originally met with you, and we had done kind of a pacing study of how much we would anticipate investing. We had kind of said 8.5 million every 2 years to initially get us to that 7.5% target over a course of about 5 years. It's been about a year, since we did that study, and I think we, given where we are today and expected growth in assets and things like that, we can certainly update that study if you'd like, and just look at that next meeting or the meeting after, just to see if we think any additional commitment is needed in 2026. I will tell you it will be much easier, and Heather will not have to do any additional paperwork. It's really just going to be a form. But one of the things that we liked about Hamilton Lane when you met with them is that they have basically this fund opens every year. So there's a new vintage of it. So the next fund will be Fund 10. We're getting into Fund 9 now, and it will be Fund 10. So if we want to give kind of additional money to them to get to that 7.5% target, maybe a little quicker. We'll see what our pacing study says, but that's what we like about this product, is that they offer a new opportunity every year to get into a new fund with them. I think that was it.
So are there any questions for Tanya regarding the report or Hamilton Lane?
I will circle back with those follow-up questions and items, and
Perfect.
Thank you.
So thank you very much. So I did want to offer a brief update regarding the fiscal 26 budget. As you know, there is no planned contribution to the OPEB trust in fiscal year 25. The budget that we are actually submitted yesterday to the county, our annual FY26 board requested budget, does include a $1.6 million OPEB contribution amount. But we won't really know until we get through the end of the budget cycle whether that will stay within the budget. I think it's safe to say that the likelihood of that staying in the budget is probably slim. We've been receiving signaling from the county that there's their budget, their ability to fund a significant request, much like the state of Maryland, is going to be difficult, but they're in the process of reviewing. So we are hopeful that they'll be able to meet our request. Our total request to the county was $35 million. So that $1.6 million is a portion of that request. We have unfortunately, it is going to be a volatile budget year for us. And there are some, unfortunately, we might see some additional reductions from the state level if current law changes and the governor is pushing current law to change, which would affect our budget negatively by almost nearly $6 million for FY26. Plus, of course, there's also concerns about the federal government and what their budgeting looks like moving forward. And while it is only 4% of our budget, it is some significant programs for us, programs that support nearly 300 positions within FCPS, with the largest being funding for our special education students. So it's going to be, I was hoping for a less eventful spring this year, but I don't think that is going to be the case in regards to budget. But I just wanted to let you all know where we were in regards to that. And we have also been in contact with our advisor who does our annual calculation as part of our annual comprehensive financial report to determine what our funded amount is, what the OPEB trust funded amount is in relation to the liability. And so there may be some changes in the discount rate that they are using due to the fact that we have not been able to make any contributions, but that will get more information on that will happen as we progress into the summer and begin those year-end statements. It's hard to believe it's already almost March and we're thinking about year-end. But that, I just wanted to provide that update as to where we are. We will know the county number in the middle of April. By statute, she has to present her budget by April 15th. She typically presents it a few days prior to, and by statute, the county council has to approve the budget by May 31st. Fortunately, in statute, the county council cannot decrease the county executive's recommended budget for Frederick County Public Schools. They can increase it, but they cannot decrease it. So once we have her number, that's generally the number that is going to be the funding number. Last year, we did have a slight increase from the county. They increased our budget from the county council by about a little over $400,000. But the unfortunate thing to that is, in order to increase our budget, they have to cut someone else's budget because they are not allowed to change revenue estimates. So, and the revenue estimates, I think this year will be a little bit more difficult for the county because there's also included in the governor's budget a change to the state tax at various levels through state income tax, right? So again, it'll be until we get through the legislative session, which ends on April 7th. There's a lot of unknowns in regards to state funding to still come down the pike. So that's my pleasant update for the morning in regards to budget. But I just wanted to make you all aware that there is an OPEB contribution within the budget that was submitted to the county executive, and we will, come June 30th, we will have a final answer when the budget has to be balanced. Are there any questions regarding that? Well, that is all that I had on this morning's agenda. So unless there is some other business, I believe we have concluded our business for this morning. But if there's any other questions or any other business. So we will adjourn our meeting this morning at 8:57. Thank you all so much for attending. Our next meeting will be, again, a virtual meeting. And I'm sure Lynn will contact you and send out, and she put it on the bottom of the agenda. Friday, May 16th will be a virtual meeting. So I'm sure the appointment will be coming out when she's back. So thank you all so much for this morning, and have a great weekend and stay warm.
Thank you.
Thanks, guys.
Thanks, Heather.
Bye.